Hi, my name is Josh Hirschey. I'm the president of Timeless Refinery. We are a leading cannabis house of brands based in Scottsdale, Arizona. Hi, Doug. Nice to see you here on the chat. We were founded back in 2012. We're one of the first vape brands actually in the cannabis industry, and over many years have grown to include multiple different product categories and states. We really take a strong focus on building brand and building consumer loyalty. That's where we feel like we really have created a strong niche in the marketplace. And today we are the leading brand in Arizona and are also operating in Oklahoma and California and building our brand and our house of products there.
Well, Josh, nice to see you again. Look forward to getting together in person sometime soon. I'm Doug Gordon. I'm the Executive Vice President and Head of LeafLink Financial at LeafLink. LeafLink is the cannabis industry's wholesale marketplace. We operate across 27 different territories to allow dispensaries to easily order from all the brands in the industry. So we currently have over 5,000 retailers utilizing the platform and over 1,500 brands. And what makes LeafLink awesome is the seamless experience that we're able to offer. So all the retailers can shop LeafLink in one single cart. They're able to look at all the brands that are selling legally in their states. And currently we are processing over $3 billion of annual orders through the platform, which represents over 30% of the entire industry. So LeafLink Financial is a service that we'll be talking a little bit about today that LeafLink introduced back in 2019 to solve some of the major pain points that exist in regard to payments in the cannabis industry, but ultimately solving pain points that exist across every single type of B2B transaction. LeafLink Financial was introduced in a way that enables the issuance of liquidity to every single operator in the industry that LeafLink's able to provide it to. And the way it works today is LeafLink is purchasing invoices directly from sellers on our marketplace. So as orders are created on the marketplace, we follow that transaction to delivery. We buy that invoice from the sellers, which enables all of these sellers to issue net terms to the buyers on the platform. So it's a new way of solving many pain points related to credit management, invoice reconciliation, payment mechanisms, and ultimately cash flow management to make sure that sellers are able to get paid and buyers are able to get credit like they would be able to in more traditional economies. So Josh, as a multi-state operator, I can't imagine that it is easy to keep track of what happens day to day on the ground with the differences that exist across all these markets, especially as it pertains to how you get paid and how you're able to issue credit and just keep track of all your customers and invoices. So it'd be great to start out by just getting some color as to what that looks like for you and your operation.
Sure. Thanks, Doug. Yeah, I mean, so obviously we started out here in Arizona and have grown to be the leading brand here. And we've been a longtime believer in the LeafLink platform. We really, adopted that very early on here in Arizona as we grew, and the platform, the LeafLink platform itself, has been a great way for us to manage that order processing flow. Before LeafLink, it was very homegrown. Us taking manifest orders, there was really no way to track it. And like I said, we were an early adopter of LeafLink and have grown here in the Arizona market and now transact 100% of our transactions in Arizona through the LeafLink platform. And that was a great experience for us out of the gate. Over time, as we've continued to grow, and the industry itself has become more sophisticated, we looked at ways, how do we help our customers, which are the dispensary operators, continue to grow and monetize their assets, and how do we continue to monetize our assets? And one of the challenges we had is we started offering factoring services and payment services, or receivable services and payment services, to give them the ability to stock more of our product, to give the customer more product on the shelf and not have any issues with running out or when they run specials on our product, stocking out that day because of cash flow issues. What that ended up causing us, though, Doug, is a significant asset there that was unmonetizable in the receivables, and or not being able to offer our customers, something that they needed to help grow their business. And so, fortunately, we were able to meet Doug through the LeafLink platform that we're already big users on, and he presented us the LeafLink Financial platform, which we were very intrigued in. Something that we were very familiar with from our pre-cannabis days, where asset-based lending is very standard and something that's very common. But of course, in the cannabis space, where everything's a little bit different and a little bit behind, it was something that we knew was not a standard product. And when Doug came to us and told us about it, we were highly intrigued because we already knew about asset-based lending, and we already liked it, but we didn't know anybody who was doing it in cannabis. And so for us, it was a great way to monetize a big asset that we had, which is this receivable base with the customers we had, and or gave us a great new selling tool to customers we weren't offering terms with, by being able to monetize those assets or monetize those terms and still allow us to have cash flow to grow our business while still giving the customer what they want, which is our dispensary partners, which is terms to stock more product on their shelf. So we were really excited and blown away. And I think a few other unique features that we were really impressed with is, in the standard world, you can go to Dun & Bradstreet and get a credit rating on somebody. And in cannabis, I think we all know that's very challenging to do. It's there's not a Dun & Bradstreet to tell you which dispensaries are good payers and which weren't. So when Doug approached us that it was part of LeafLink, that was really eye-opening to us, that they could see the transaction flow and see the consistency of payment and orders through these dispensaries. And it gave them a unique ability to almost be a Dun & Bradstreet version for the cannabis industry. So for that, we were really impressed. And then lastly, the ability to consolidate our payments into one platform and not have to try to manage payments through, a spreadsheet or through our own in-house ERP system. And as we've expanded other markets, try to figure out which customers can we give receivable terms to and which can we not, and how do we consolidate those payment terms and know who's collected and do not is a very cumbersome process. And all those things have been made much simpler to the LeafLink platform and the LeafLink financial services.
No, I appreciate that praise, Josh. And you hit on something that I found incredibly interesting and unique, and probably frustrating for the operators in the industry, which is trying to manage your book of receivables or your book of payables without any kind of centralization, right? So when I started at LeafLink, I went out to California, Colorado, Arizona, met you, and I was actually amazed with how each individual company was solving this challenge. Every single state operates differently. You have some states that are heavy in cash, some states that have matured and been able to access banking on a more consistent basis, and they're paying more in checks, some even via ACH. But like in a state like California, it was amazing that you had brands that were selling to sometimes 300, 400 retailers, and every single retailer had different terms, different mechanisms of payment, and to manage the flow of money coming in and understanding where to assign that and how to, if there was late payments, how did that affect our selling relationship? Are we cutting someone off? And everyone's trying to grow in this industry, which is a challenge when you're trying to look at it from a viability standpoint, trying to protect your business from a credit standpoint. So I've been, kind of amazed with how the industry has been able to solve this problem to continue operating when there's so much discrepancy from a day-to-day operation standpoint. So one of the things with LeafLink Financial we've been trying to do is create that centralization and create that consistency where we want to allow a brand like Timeless to issue net terms to all the customers that deserve it, right? And we want the retail customers that you're selling into to be able to earn into credit and be able to grow with the industry, right? And I think the only way you're able to do that is you have a sophisticated financial relationship with both your brands or an institution like LeafLink. So one thing I wanted to talk about here was, what was it like at the beginning when you're trying to access financial services? Then you're talking about, how do I issue trade credit? What were the processes you put in place, and like how have they evolved, given the industry has begun to evolve as well?
I think it was a little bit of trial and error. And for us, starting out in Arizona, we're a limited license state. So it was a lot more of, who are our key partners and then over time, how should we build up a creditworthiness with them? But there's, again, as I mentioned earlier, there's no source we can go to like in the typical non-cannabis industry, like a Dun & Bradstreet, where they can tell you, hey, this is how creditworthy this person is. So it was definitely more of a gut feel. And I think for us, when you approach this with what the concept of being able to use the LeafLink platform itself to build that creditworthiness and then translate that to the financial side, that was really eye-opening and exciting for us. Secondarily, obviously, starting out in Arizona, we got to know the operators here very well and got very comfortable with them. However, as we have big ambitions to grow, as I mentioned, we launched in Oklahoma 2 years ago, and California this year. As you enter these new markets, and as you mentioned, Doug, in cannabis, every new market is very unique. It's not again, it's not the traditional world where you can build in a certain market and scale up across the country. You have to almost start from scratch in each market and understand the nuances of that market. Understanding who are the right players, who is credit worthy, who should we be offering terms to. Obviously, it's a unique advantage to us to be able to go to these big dispensary and or delivery operators and offer terms so they can stock more of our inventory. We don't have that knowledge, and so having a partner like you guys that really can see that's been a huge accelerator for us, because again, before we were doing it much more on a gut feel. From a payment standpoint, we were doing it much more, hey, what are you guys comfortable with? Would you rather us pick up cash, which causes a lot of challenges on our side, as it does, I'm sure most cannabis operators were, carrying $100,000, $200,000 in cash in a truck. There's a lot of risks that go along with that. So all the mechanisms from, hey, is this account a good credit-worthy account? Should we extend terms to them? To how do we get the appropriate payment and how do we track that payment? Those were previously done very back of the envelope and very gut feel. Whereas now that we're working with you guys, it's been much more of a professional type approach where you guys can tell us, hey, these guys, we see their flow, we see their payment, we see what they're doing through our system. We are comfortable offering this credit terms. We can do it through you guys and monetize that inventory out there so it doesn't restrict the capital that we need to grow. And then lastly, we can track the payments very easily to see, hey, are they over their terms? Are they in their terms? Should we stop sending to them? Are they all good? And we can actually increase our sales to them. Those are things that make it much more professional. And in my opinion, much more like a normal business versus, how we had to operate in cannabis when banking and lending was very restricted.
No, totally. And I think the challenges you just laid out, what I find fascinating is they're not so different than what the traditional non-cannabis economy has to go through. I mean, understanding who your customers are and what kind of capacity they need from a credit standpoint. There's operations of many, many people that are in the back office underwriting, buyers of their product, trying to figure out what a credit limit should look like, what terms they need to offer, how are they going to float that with a working capital line, or they're going to float that via equity. There's a challenge that every single industry faces, but I think what's so interesting about our industry is that we're all startup companies, right? We're all trying to grow, we're all trying to expand. Many of us are operating on losses as we continue to expand and investing in our growth, which is a very challenging underwriting exercise. One of the things that I found, really cool about the LeafLink opportunity, especially as LeafLink Financial, was the fact that, we are trying to create something that every other industry wishes they had. Right. There's so many barriers to disrupt, traditional industries. And, when we get together as a management team, we're always trying to think how can we give something to our customer and our thousands of customers that make doing business in cannabis even better than it is in other industries, right? And really become a standard of what that should look like. And as it pertains to the B2B transactions, credit management is one of the most difficult things, and it's so opaque as to what you're trying to accomplish with it. And we really want to become an outsourced way that you can manage credit, issue credit, and dislocate the cash flow needs of both sides of the transactions, right? Sellers should have the ability to, get cash up front and accelerate payments from their vendors when they need it. It doesn't have to be an all the time thing. We definitely, are big proponents of, you can pay each other directly, but, there's different business needs that require accelerated payment. On the buy side, being able to centralize your payables in one place and being able to understand who you owe and when, and having that, that liquidity available where, through LeafLink Financial, you're always going to get net terms. And, in the future, we're going to be allowing retailers to start, extending those terms and designing their own payment plans and giving them true liquidity options that have no effect on the sell side of the equation. So I think what's super interesting about LeafLink, given our market penetration, having over 30% of wholesale transactions, running through the marketplace, it gives us tremendous opportunity to bring this dislocated cash flow service where the needs of sellers and buyers can actually be met without them affecting each other's business. So I know you come from a financial services background and you've seen a lot of B2B companies grow and excel, but how do you see this playing out over time relative to what you've seen in more traditional economies?
No, for sure. I think you hit a bunch of great points there, Doug. I mean, for us, as Timeless, we are in a high growth mode. We've grown to be the number one brand in Arizona. We're launching in California. We launched in Oklahoma. We have 2 or 3 more states planned for this year. But at the same time, we've been very cognizant that we don't, as a leadership team here and as an ownership group here, we aren't heavy out there in looking to drive equity investments or big debt investments. And so it puts us in a unique position because I think we all know cash or growth requires a lot of cash. And specifically when you're growing and you're offering things like terms and inventory financing and things like that eats up a lot of your cash. And so that was a concern for us for sure going into, what our planning and how we want to grow over the next 3 to 4 years or 5 years in cannabis. And like I said, in most spaces, traditionally you could go out to a lender and get an asset-based line. That's not how it works in cannabis. As you mentioned, it's a unique. So when you came to us with your offering, it was very eye-opening to us and very exciting for us because it gave us the opportunity to monetize a lot of the assets we had built up, to grow without having to go on and take equity financing. And it also allowed us to go to our customers who are also, we of course deal with all the big multi-state operators that are well financed, but also the up and coming dispensary operators that are, have 1 or 2 or 3 stores that are also looking to grow and have capital challenges in themselves. And so it gives us the ability to do things with them and be creative with them to help stock more products, help do things to make sure they have product on the shelf of ours all the time, without tying up all of the capital or requiring us to go out and do things that are financially dilutive or financially impactful to our business. And so I think that was really the exciting thing for us, especially, as I mentioned, we're launching in new markets. And then as Arizona looks to hopefully go rec here in November, these things are great things for us as a company and great things for us as an industry, but also, for any operator, their big concerns is how do I make sure I'm cash flowing these things appropriately? And having a partner like LeafLink Financial gives us that security that, hey, we can go extend our terms with these key partners of ours. We can go, have a platform where we make sure that they're paying us in an appropriate way, giving them the appropriate terms as we continue to significantly grow our business in each one of these markets. And also, define who the ones we should be giving terms to and who we shouldn't. It's so invaluable to what we are trying to do as a company in our growth process. And
the cost of equity is something I'm not sure isn't talked about on a broad basis. I think we're all talking about raising money, and everyone wants to raise money to grow. But when you're floating receivables, like you're floating that with equity dollars, and the cost of that is exorbitant.
It's huge, Doug. I mean, we sit on, before, of course, you and I talked when we first met on the receivables we were sitting on, and that's straight out of our cash flow, right? And it's something that we did to support our dispensary partners before we met you guys because it wasn't available in the industry, but also something that was a huge eater of cash for us, right? And most of the people before a LeafLink Financial came out were going out and having to raise capital dollars or equity dollars, like you said, and the cost of diluting the original investors and the ownership group. And I think we all can be, realistic in saying the last few years in cannabis, the cost of equity has increased significantly. Those are all things that are, as an operator, are a challenge and something that when you're dealing with, your internal ownership and any outside investors, they would like to limit that dilution. And by being able to have an easy asset-based lending program that it's very clear what you're lending on and how you're lending on it, and how that translates makes things much easier for us as an operator for sure.
No, awesome. Yeah, I mean, we've seen this story before of markets going from medical to rec, and I know you're gearing up for the increase, but what was interesting when we saw that happen in other markets, the required supply to get prepared for that, what the demand's really going to look like. The purchasing just goes up. And, to be able to support that with liquidity is something that we're very cognizant of, especially given the environment that we're in. I mean, Arizona is one state that is on the ballot to go rec. And I think that there's a number of other states going on the ballot, 4 other states actually on the ballot for November. And I think that in 2021, we're going to see more of an increase. So one thing that was top of mind for us here at LeafLink was ensuring that we have the adequate liquidity to provide to the industry. And it obviously isn't equity dollars. We were able to secure a $250 million debt facility that allows us to inject that liquidity to all these operators and really help professionalize the industry, but mostly get ready for the the expansion that's going to occur within states and outside of states. So I think I'm excited to see what happens in Arizona. I'm excited to see what happens in these other states. One thing that was top of mind for me was how our relationship looks state by state. It's really funny. Like in Arizona, there's a tight knit group. It's professional. Everyone knows each other. They want to create efficiencies. They lobby together. And then there's newer states where everyone's starting to get to know each other. And that's where I think that we come in with an interesting point of view, being able to inject liquidity into these established markets to create stability, and then create more stability and relationship building in the newer markets as they start taking form. So I know you guys just launched in Oklahoma, and I know you're planning on this gear up in Arizona to go rec. So like, what do you see the difference are from like an Oklahoma, you're entering the market, there's over 1,000 different retailers versus the tight knit group you have in Arizona?
Sure. No, I appreciate that, Doug. Yeah. I mean, in Arizona, we as we talked about earlier, we are one of the first brands in the state, and we built ourselves up to be a leading brand in the state. So it's been kind of a different process here, where for us, we already were, as you mentioned, very tight with the major retailers here, the major dispensary partners here. We were already offering terms. And so the benefit of LeafLink for us was a little bit different here in Arizona, where it was, hey, we can monetize these significant assets we're already sitting on with them and put those to work and help us grow versus being tied up in an unmonetizable way. And you guys have given us great ability there on that platform. At the same time, as we launched in Oklahoma last year and then California this year, that's a much different story, right? So Oklahoma, you have 1,200 plus dispensary operators. Us getting obviously we've done the same kind of processes we've done here in Arizona about building the brand and building that brand loyalty, and working both with the consumer and the dispensary operator. But understanding, hey, what dispensary operators, I think a big thing for us in Oklahoma, which dispensary operators are going to be here to be our partners for the long haul and continue to scale up, and then who should we be giving terms to in this market is extremely important when you have so many operators and so many operators that are looking for different things to separate themselves. And having you guys there to operate with us has been a big beneficiary to say, okay, hey, this guy, we're seeing that they're separating maybe from the rest of the significant pack of operators, and these are guys that we want to offer terms to together. And then it gives us the ability to grow with them. And we're very focused on how do we partner with the right operators that can accelerate both of our growths. And I think that's been a big benefit for us in Oklahoma, where it's a new market, lots of operators, and we can go in there together and kind of say who's the right people to work with together, who give the right terms to, and separate from the rest of the pack. At the same time, in a market like California, which is much more established and much more competitive that we're entering, you guys have such a great knowledge for even prior to us of many years of working in that market and understanding who are the good operators there, and we've already built great creditworthiness, and these are the guys you should be working with, and hey, giving us really recommendations on who are the right guys and who are the right different delivery and dispensary partners we should be working with to grow. So I think as we enter each market, it's been great because there's some that are brand new, like Oklahoma, where it's the wild, wild west and we're all figuring it out together, but we have each other to support on. And then there's other markets like California, which are very well established. And you guys already have a great feel for who are great partners there and who aren't. And we've been able to utilize you guys both from the standard LeafLink platform and the financial platform to say, how do we put our strategy together into each of these individual markets, which is really the exciting and the great thing about cannabis is that each market we go in, it's totally reliant on us all working together to make sure that market's successful or not.
No, I was just going to say is one of my favorite parts is that we're all growing together, right? And one of the things I'm most excited about is, being in a position here at LeafLink to have market perspective and then have great partners like yourself that provide more ground level market perspective. And I think the combined knowledge and all of us growing together is going to really pay dividends as the industry continues to mature and as we enter this new phase of growth. And Josh, I always love talking to you and working with you. Excited for what the future holds. I'm glad we're able to sit down and talk today, and really look forward to all that's to come for the end of 2020 and 2021. So thanks for your time, man. Yeah, no, thank you, Doug. We enjoy working with LeafLink and you at LeafLink Financial, Doug, and you guys are really helping us put the right tools in place to grow. And we have, the great thing about cannabis is it's such a big market and we're all just entering. So we get to enter such a unique position where we get to enter a giant market, but almost in a startup phase. And so having great partners like LeafLink and LeafLink Financial
to help us grow and be to achieve our aspirations of being a leading cannabis brand across the nation is great. So we're excited and appreciate you inviting us to participate in this.
Definitely, man. You guys are well on your way.